customers' money could become yours faster and safer? It used to be simple, a journey from pocket to pocket. And now, even though it's a single click, selling software online has become incredibly complex. Now you have to think about taxes, payment routing, chargebacks, fraud, and getting it wrong means lost revenue, compliance issues, or worse. At Paddle, we've mastered this complexity as a merchant of record, handling all the financial and legal responsibilities, making the journey simple again, so you can focus on your customers and growing your business. It begins with a customizable and localized checkout designed to boost conversion where customers pay in their local currency and preferred payment method. With a click, our smart payment routing kicks in, constantly optimized for successful transactions. Our global network of local payment providers, entities, and banking relationships ensure your dollar's journey is smooth and optimized to drive the best payment acceptance rate for you, regardless of borders. And if your customer's currency is different from yours, we convert it for you. Now, we enter the labyrinth of taxes. But don't sweat it. We take all the liability as your merchant of record. We automatically collect sales tax and VAT for you, and then register, file, and pay according to local tax compliance. Even as the journey comes to an end, Paddle's mission isn't over. With Paddle, every payment is fully protected. We help reduce chargebacks and fight them on your behalf so you avoid costly penalties. We keep the journey on loop by automatically recovering failed payments to increase customer retention. We provide comprehensive insights into all customer transactions and the health of your subscriptions, making Paddle your single source of truth. Our platform helps you set the right price, ensuring you're competitive and profitable without the guesswork, localized for every region. So, how does more of your customers' money become your revenue? With Paddle, automatically. We take care of everything, so you can focus on what you do best, serving your customers.
No, I think we're live. You can hear me, Jana? Okay.
Yeah.
I don't know how we follow that up. I think Paddle always crushes it on the intro videos. And we're not talking about the labyrinth of taxes today, but hopefully something equally, if not maybe a touch more exciting, just localization. But I'm excited to be here. Looks like we got folks from all over, as we typically do. But where are you calling out of today, Zana?
I'm in Miami today, so.
Okay.
Yeah. Yeah. What about you, Evan?
I'm in North Carolina. And if
Nice.
there are folks scattered about the globe, feel free to toss in the chat where in the world you are, because I think that's actually quite relevant for the discussion today. So I'm excited for this one. We've done a number of webinars actually over the past couple months with Paddle, digging into a range of topics, obviously pricing and tax and things like biometrics and usage-based models. But today we have a very specific topic that is an underutilized lever for a lot of SaaS companies, and that's the topic of price localization. So we have a lot of ground actually to cover, but before we do that, I just wanted to quickly introduce the two of us. So my name is Evan Grubb. I work on the Price Intelligently team here. I've been here for about 7 years and primarily focus on pricing and packaging strategies for SaaS companies, which is pretty much what the whole team does. I should note, if you Google us or if you've seen the news recently, we were once a part of Paddle for a couple of years, and as of a couple of weeks ago, we actually just got acquired by a different consulting firm called SBI Growth. So pretty awesome fit for us, and we're all excited about it, and obviously remain in close partnership with Paddle. But like I said, we're going to talk mostly about localization today and pumped to get going. But Zaina, you want to introduce yourself?
Yeah, thanks, Evan. So hi, I'm Zaina Karem. I'm an analyst at SBI Growth now, once Paddle. And I've been here for a little over 2 years. I've done a lot of the work on price localization internally, so helping develop our strategies for helping clients test and uncover their willingness to pay in different regions. So it's something I've been super interested in. Excited to share with you guys.
Awesome. Thanks, Anna. So let's do a couple of things today. One, we just did some intros. Obviously, if there's folks that have questions about the work that we do, we can grab some more time. But the primary source of discussion today will actually not be about price intelligently. It'll be mostly about these topics around localization and pricing. So we'll start with a quick overview of pricing in SaaS. Some of this, if you've been on webinars past, will be kind of review, but I think important to set the stage for the broader discussion, which will be price localization types, best practices, and some benchmarks that are relevant, hopefully for all of you guys going through similar exercises. Then we have Q&A at the end, but yeah, Sarah mentioned in the chat, if you guys have questions, like feel free to just toss them in. And if relevant, like we'll answer them live. And if not, we'll reserve some time for the end. So Dana, you ready to rock?
Yeah.
Let's do it. Okay. So through Paddle and ProfitWell and now SBI and Price Intelligently, but a lot of random names flying around, we as a team have seen inside a ton of different subscription companies, about 35,000. And there's a lot that we leverage with this data. The Paddle team actually does these like monthly and quarterly market reports, which if you haven't checked them out, like highly recommend doing so. It's basically looking at churn data, growth trends, LTV, et cetera, and sort of just like almost like an index of the subscription ecosystem. So maybe even Sarah, you could link that in the chat if folks are interested, but there's a lot of applications for this data. From a pricing perspective, we've actually used this to tease out two core principles that I think are relevant to this discussion. All right, one of those principles is the idea that monetization is the most impactful growth lever you can pull from in a subscription model. And also it's highly underutilized. Right, so I don't know if anybody's seen a graphic that looks like this. This is predicated on what's called a simultaneous equations model that McKinsey came out with many years ago. It's actually one of the reasons we started Price Intelligently 12, 13 years ago. But it basically shows us if we were to isolate each lever of growth in a subscription and increase the effectiveness of each one by 1%, what's the yield on top line revenue? And so we can see like, hey, acquisition, if we were to increase conversion rates by 1%, we see about a 3% lift. Whereas if we increase ARPA or ARPU, which would be governing metrics for monetization, we see closer to a 15 or 16% lift. Obviously, those percentages are very nuanced and subject to change based on industry, market dynamics, maturity of the business, et cetera. But the relative impact is quite interesting for us, specifically in the context of, if you look at a lot of SaaS companies, like 20 to 30% of their staff is dedicated to things like acquisition, right? We have sales, we have product marketing to get folks in the door. Similar deal with retention, right? Like we might have a CS team or we have functions internally to keep customers around and keep them happy. But monetization is almost this like black sheep of the growth family where you might have a pricing manager or you might have sort of a cross-departmental team internally that focuses on pricing. But it's a really high leverage growth lever that a lot of folks don't properly capture. So that's the first principle that I wanted to touch on. The second is it's actually a bit more binary, but it's this idea that pricing and packaging, like a marketing or like a product strategy, should be adjusted on a regular basis. And we can see through the data that I mentioned before, the companies that are not making regular pricing changes tend to see pretty stagnant growth, ARPU and ARPA growth, right? You see this bottom line. These are companies that haven't made a pricing change in 5 years. ARPU remains pretty flat. Whereas the sort of top red line, these are companies that are making some sort of a pricing change once per quarter. And this intuitively kind of makes sense, right? If you're making regular pricing changes, you are likely value aligned with your customers' preferences. You are staying up to date with packaging and value metrics, but it's easier said than done. And so we're going to get into obviously some of the tactics today, but I just want to note that pricing, when we talk about pricing, it's actually more than just the price point you put on a page. It is things like your feature packaging, right? Are you a PLG company that has good, better, best packaging? Do you have add-ons? Do you have free features, et cetera? It's the value metrics that you're charging on. Are you charging per user? Is it per gigabyte, AI credits or tokens, et cetera? It's also the way that pricing model is structured, right? You can charge on AI tokens in a consumption model, or it could be fixed fees with a set amount of usage included, right? The way that you design the pricing models can vary quite a bit based on the market and the product. It's also things like multi-product bundling. If you've built another product aside from your core product, you then have to figure out the nuances of bundling multiple products together. And then, of course, it's also the price point you put on the page. So we almost think about pricing or monetization strategy in phases, where pricing is sometimes the last phase, sometimes it's the first. It varies quite a bit. But today, like I said, we're going to talk about one of the elements of pricing, which is localization. And with that, Zaina, maybe you can bring us up to speed on like what we actually mean by localization and some takeaways for the folks here.
Yeah, thanks, Evan. So localization, start off, want to just point out that there's two major types of localization that we tend to cover. The first of which being cosmetic localization, which focuses more on localizing your actual pricing page in terms of the language and the currency that's being displayed to people in their home country. The second, it goes a little deeper, talking about market-based localization. This one requires a bit more research. It's maybe a bit more time and resource intensive. So it might be considered like a second step for your localization strategy. But those are the two main types that we want to cover. But overall, localization is just meant to be a way to adopt your pricing strategy to a local international market. So the market outside your home country, whether that's the buyer personas involved, whether that's the actual price points that you offer based on different locations, or the different term lengths that you offer for your subscription. All of these things can depend on different consumer preferences in different markets. So getting into it. Starting off, we'll cover cosmetic localization. So like I said, this is focusing mainly on what your actual pricing page or website displays to the consumers. So right off the bat, if your customers coming into your pricing page won't be able to understand or have to translate themselves in order to read or go through your purchasing process, you're already leaving a lot of people behind. So 40% of consumers won't buy if it's not in their local language. Sometimes this seems obvious, but a lot of things that a lot of companies do miss out on, especially when starting in that early stage, just not localizing for international markets. And so, of course, we know this to be true for B2C customers. Like, if you go to Netflix and you're in, say, Spain, you're going to want to see that in Spanish and all of your options for pricing and your checkout process in Spanish. But also for B2B customers, this is a huge thing. So not everyone in the world, speaks English. And so it's definitely important to localize your pricing for those B2B buyers as well, just to make it a smoother process. You don't want anything that could cause like potential roadblocks, anything that just requires like more work and delaying the process. So language can definitely be one of them. Something also that is important is just offering in local currencies as well. So this is a really simple fix. Cosmetic localization does not mean, changing your different prices, the actual price points per country, but just changing the local currency to offer. So say you're offering in Europe, you want to always be offering your price points in euros rather than dollars. Or if you're in Mexico, you're offering your pricing page in Mexico, you want those to be in pesos, even if it's the same actual price. That just will make it easier for customers to come in, understand exactly what it means without having to pull up an exchange calculator, anything that could cause friction in that sales process. Moving on to market-based localization. So it doesn't always have to be this way, but we see it as kind of the second step in your localization process. So if, you've gone through the cosmetic localization process, which typically takes less time, you can move on to like the deeper research that's required for market-based localization. So there's a lot of things within market-based localization. We'll get into just a few of them, but mainly this encompasses things like understanding differences and willingness to pay across different geographies, right? So things like purchasing power, different economic conditions, how local competitors affect the market. All of that plays into what you should offer as far as prices in the local market, rather than just basing it off your home market. So why is this important? As you can see, SaaS is growing across the world. So all across different regions from Europe to Australia, New Zealand, Latin America, North America, SaaS has been growing. And so that means that naturally SaaS users are going to be also growing, expanding, particularly in B2C, but also B2B. So definitely important to have a more international focus and be inclusive as possible in your pricing strategy. So how do you do that? One major part of this is understanding purchasing power in different markets. So this map right here is Netflix subscription costs by geography, right? So as you can see, different regions will pay more for Netflix than others, and other regions are not willing to pay as much as, say, the US. So something to keep in mind here is just that you want to be focused on two things. So acquiring growth, customer growth, and those whether it's India or the Philippines, something where you're just going to lose to local competitors because there's going to be people there offering price points at a more local price that matches people's willingness to pay. So definitely important to take that into account, especially if you're focused on driving acquisition. On the other side of it, you have countries that are maybe willing to pay more than what people in your home country would pay, right? So in this example, we have like Switzerland at the top of the map. So you also don't want to be losing out on monetization in those regions. If you can charge more for that, whether that's just because, purchasing power is greater, or whether in that particular industry, people are willing to pay more in this region because of lack of local competition, all of these things, it's just important to be able to charge more in those regions and monetize more effectively. So how does localization correlate to growth? So this is actually from ProfitWell's own study where they surveyed different SaaS companies. And so as you can see, not localizing at all, we saw they aren't growing as much. Even doing a little bit like cosmetic localization, like we talked about, changing your pricing page, offering different currencies, you're already boosting that growth. Once you localize in one more country outside of your home country, it's an automatic boost in growth. Once you reach 3 or 4 main markets that you're localizing in, maybe that's the US and Europe and Latin America, you're already raising, boosting your ARPU. And a way that we like to think about this is maybe an early stage company might focus on cosmetic localization. As we said, this is a lot less time and resource intensive. So definitely that is where you should start. If you're a growth stage company, you ideally should be pricing based on market saturation and willingness to pay. So you should be doing that market research to find out willingness to pay in those regions. Obviously, this takes a bit more time. You might need to outsource research or need a research team, but it's definitely worth it if you're looking to grow and drive acquisition in those markets. And then, if you're a late stage company, if you're not localizing, you're probably losing to other competitors that are localizing or local competitors. So definitely important there. And then something else to point out is that if you're a late stage company as well, you should just be also continuously localizing. So pricing is dynamic, like Evan mentioned, and this needs to be a process that happens every 6 months to a year, ideally, where you're reevaluating the markets, reevaluating willingness to pay, all of this, and changing your prices accordingly. Something to point out, 50% of SaaS companies still are not localizing. So, this is leaving a ton of money on the table, but also a lot of opportunity for SaaS companies that do localize and make that effort to localize in different regions. So like we said, willingness to pay is just part of this, offering, specific payment methods, operational localization, whether that's, different tax rules, things like that, they all play into localizing.
Hey, Zana, can we hang out there for a minute? Because there was a question from Ignace, hopefully I'm not butchering your name. It's a good one, I think relevant to this slide. So the question was, do you mean displaying the local price or also changing the local currency is one, and two, how do you account for bank conversion rates in display? So I think the argument here, Ignace, is that there's steps to localization. Like the first step that is essentially, we would argue, a prerequisite to localizing price is make sure that your currency is updated in the local region, right? So if you are in Lithuania, but you're selling to the US, like make sure that we in the US can see US dollars and folks in the UK maybe can see pounds. Like that is a step one that is necessary because it directly leads to higher conversion rates. In terms of conversion rates, this gets a little dicey. It kind of depends on who you're talking to or like the stage of the business. I've seen folks that account for that in their own pricing. If they have specific margin targets, then they will sort of bump up or bump down given the exchange rate. The other thing for currencies that fluctuate quite a bit is they will set a floor and a ceiling. That way, pricing isn't so dynamic that you can have this huge drastic shift on any given day or any given month, leading to large disparities in what customers are paying, but rather you have a sort of set window that may be dynamic from a pricing standpoint. So that would be kind of cosmetic localization into the exchange rates, or just being cognizant of exchange rates. And then the sort of last step that we argue that Zaina is outlining here is what we call market or true localization, which is making sure that you're pricing based off of basically willingness to pay and value in different regions. Like we know that folks in the US will have a higher willingness to pay than folks in maybe Southeast Asia. And so even if they're getting the same product and it's the same buyer persona, willingness to pay is just different. And so we want to account for those things such that we can properly monetize and acquire customers as best we can. So maybe more than you asked for, but yeah, anything to add there, Zaina?
No.
No, I think you actually just cut out, so.
Sorry. No, thank you, Evan. I just wanted to add that one other part of just adjusting for those changing exchange rates, that's another reason why doing the continuous research is so important. Because especially in economies that have more fluctuating currencies, being able to keep up with the changes in currencies, so whether that's every 6 months to a year, doing that research again and changing your prices, that's how you kind of keep up with that. If you're working in regions that have really fluctuating currencies, so there's a few countries they might be experiencing like hyperinflation, that's also something that you should find out in your price localization research itself by surveying the market. So something that we have looked into for other companies is say whether to offer prices in Argentina, in US dollars, or in Argentine pesos, because the currency recently has been changing so much that maybe it's easier for a lot of people to just read US dollars and know how to purchase that better, especially in like the B2B space. So that's something that you can discover through survey research, interviews, things like that, to understand, those nuances there for more tricky economies.
It's a great call. Nice. There was another question here actually that's kind of relevant from Essel. Again, I'm just butchering names, let me know. Should you consider that hosting costs can be much higher in regions where willingness to pay is actually lower? What do you think about that, Zaina?
Yeah, that's interesting. So
yeah.
I think of course, it all depends on your model and the costs involved in producing your service, right? But I think, as long as you're covering those costs and you can drive acquisition at first to get growth and kind of beat out the local market, I still think that is ideal. Kind of just getting your foot into the door for those like lower willingness to pay areas, and then maybe reevaluating your pricing in the future or finding out how to reduce operating costs. But again, like competitive research too really plays a role here. If competitors are somehow offering their prices for lower, then you should be trying to somewhat be in that range as well. Otherwise, you're not going to drive that acquisition in the beginning, and then hopefully increase your prices over time.
Agreed. Ideally, like your pricing strategy is predicated on like a few different strategies. One would be competitive pricing models. One would be margin targets. And then hopefully a big slice of that pie is also an understanding of your buyer's ascription of value. So you're pricing based off of value, you're pricing based off of cost and margin targets, and also like staying competitive in the market. You do those things, I think you'll be in a pretty good spot.
Yeah, that's a great point, Evan. Awesome. All right.
Cool.
Well,
yeah, feel free. Anybody else that has questions, feel free to just toss them in the chat. Otherwise, Anna, feel free to keep going here.
Sounds good. Great. So, touching on another area of localization is localizing your payment methods, right? So, payment methods nowadays vary in literally probably every country in the world, right? So, in our home country, the US, Apple Pay, Google Pay, extremely popular, especially if you're offering a B2B or B2C service, you're probably losing out if you're not offering that at checkout. It just makes it way easier, way less friction to go through the checkout process. So that's an example, but for every other country in the world, they have their own version of these things. So as a lot of people probably know, in China, Alipay is extremely popular. So if you're not offering Alipay during your checkout process, you're probably leaving a lot of people behind. I know, from my experience, I just tend to not even carry credit cards around with me anymore. So I would guess, in a lot of regions of the world that have these digital wallets or, saved payment methods on their computer, on their phone, people aren't just, you're going to lose people at that checkout process if you're not offering those local payment methods. And yeah, studies show that this can increase conversion by up to 30%, which is a huge amount. And then localizing payments beyond digital wallets. So digital wallets probably is the easiest thing to offer in the beginning, but as you dive into localizing in more diverse markets, there's a wider variety of just alternatives for payment methods, right? So we have a few examples listed in the slide here, but something that's extremely popular in India, for example, is UPI, Unified Payments Interface, an account-to-account transfer. Same with Pix in Brazil. These are account-to-account transfer programs. They're different from digital wallets. And so offering these specific types of payment methods is extremely important. For example, in Brazil, over 70% of people use Pix. More popular than credit cards and more popular than, say, like Apple Pay or a digital wallet. So, companies like Spotify or Netflix have begun offering their consumers to purchase with Pix. And the same for in India. As you can see, AWS started offering for customers in India to pay with UPI. And these are just massive consumer markets, right? Like talking about places like India, Brazil, Mexico, you're really especially in the B2B, B2C space, being able to offer these different payment methods, you're just going to really grow in terms of customer acquisition. Something interesting I wanted to point out too is this example in Mexico of OxxoPay. This is a cash-based voucher program where people actually can go to their local convenience stores and pay in cash, since it's more of a cash-based economy still. Not as many people, use credit cards as they do cash. So being able to pay for your, say, Spotify or Netflix subscription in an actual store with cash, offering that, I mean, that's just a huge way to make your service more convenient to a new geography or a new country. And then probably most importantly is tapping into your regional pricing potential. So as you can see, willingness to pay, this is where that willingness to pay research really comes in. Different countries are just willing to pay more for different services. And of course, this isn't like a one size fits all. So for this example, I wouldn't use this as your guide, but rather as an example, because it can vary so much depending on the industry. But in this example, you have, willingness to pay is lower in Canada, Eastern Europe, and Brazil than it is in the US. So because of that, you're probably losing potential customers if you're not offering lower price points than you would for your US market. And then on the other hand, Western Europe and the Nordic countries have a much higher willingness to pay than the US. So even though you might be getting customers there, you're not monetizing effectively, and you're just leaving money on the table if you're not changing those price points to kind of capture that additional value there. Another way that you can localize, and I think this actually should be kind of step one in your market-based localization strategy, is understanding your local buyer. So, every company, especially during early stage, is going to identify their buyer personas, right, in their home market. If you're expanding internationally, I think a good place to start is just understanding how those buyer personas change in that new geography. So this is an example of a client that we had where we helped identify buyer personas in Brazil and the US. So as you can tell, they're very different profiles. In the US, this is for, by the way, this is for a cybersecurity platform. In the US, they might be a CISO, so a Chief Information Security Officer. In Brazil, we found they're more likely to be a Director of Information Technology. So different roles from the start that you're more likely to target and be the person actually speaking to in this buying process. Some other interesting things we found was just differences in decision-making. So for our buyer persona in the US, they're more likely to have a team decision-making process where everybody has to evaluate. There's multiple decision makers in the process, while our Director of IT in Brazil, she is the final decision maker. So maybe it's a more straightforward buying process for this particular software. And then, identifying things like how company size, revenue changes per geography. You might target enterprise companies in the US, but then mid-market companies in Brazil or Mexico. So those are things that are really important, as well as with value props and pain points, understanding what really resonates with different buyers, and just recognizing that the buyers in your abroad will just not be the same as your buyers in your home market most of the time. And then going into regional price sensitivity. So again, global pricing, it's not a one size fits all. This is another example of a client that we had where we found to be, they were evaluating between Japan and Australia and New Zealand as markets and the price points that they would offer there. And yeah, they found that the acquisition focused price point in Australia was just much higher than that in Japan, by about 400 euros. And so this is an example of how, doing that research, that market research to understand where those price points would be is really important, because you're acquiring customers at different price points in different geographies. Again, looking at differences in willingness to pay across regions. This is for another client that we had looking to increase their customer acquisition in different regions. And they looked at these 5 different regions and found pretty staggered willingness to pay across them. And we recommended to them that they, adjust their price points to around these. It doesn't have to be, exactly these price points, but that they just have an idea of like the percent differences between willingness to pay of each country, and then adjust their price points accordingly. Awesome. And then kind of getting to summarize it all. Step 1, cosmetic localization. So understanding your buyer personas and willingness to pay in your home market first. Every company should be doing this at, the early stages. Translating your website and pricing page so it's easy to navigate for international buyers. Localizing your currency, so not actually changing the price point itself, but just changing to the local exchange rate for that country. And then localizing your payment methods so that nobody is left behind at checkout. And then once you've done this, you can get to a little bit more deeper localization of true market localization. So identifying those international buyer personas, those geographically specific buyer personas, their pain points, their value propositions, the different competitors they use, all of these things. And then do the market research to understand willingness to pay, purchasing power, and payment preferences. So we actually didn't touch a lot on this because, like we said, price localization encompasses so many things, but even testing things in market research, such as contract lengths, we found with our clients that certain countries may prefer more flexible contract structures, while others might prefer annual contracts. So things like that, even offering differences in contract lengths or different sign-up incentives or discounts, those can also be localized as well. And then again, repeating your price sensitivity research, ideally every 6 months to a year, resource permitting. Definitely would recommend at least once a year when dealing with multiple markets, because things like currency fluctuations, changing economic conditions, new competitors popping up, all of these things impact changes in willingness to pay. So that is all I've got. I know we have some questions in the comments. So Evan, if you should we just hop over into Q&A?
Yeah, let's do it. If there's more, it looks like Liam has one that we can touch on in a moment. But if there's more questions here, feel free to drop them in the chat and we'll make sure we cover live. But maybe for this one, Zaina, go back to the willingness to pay slide that shows relative willingness to pay to other regions. Liam's question is
this one? Oh, wait, sorry.
Here. Actually, it looks like I can control here. Let me just go back. So Liam's question, here we go. Does that willingness to pay get impacted by indirect taxes? For example, VAT in the Nordics is generally much higher than, say, in the US. So how much of that opportunity is swallowed by the additional tax? Probably a good amount. But again, this is not showing relative revenue within each of those regions. It's showing relative willingness to pay. So if we just invert the opportunity cost, if you're pricing at the same price in the US and in the Nordics, you're capturing less revenue because of that tax, Liam. So this is partially highlighting, hey, here's a direct opportunity to maximize the margin that you can get from Nordic customers because the willingness to pay is higher. And that may be due to cultural factors or economic factors like taxes in those regions, but something to be cognizant of, hey, taxes vary in these different countries. And so we want to maximize our margins, but also stay in line with willingness to pay. Kind of like what I was mentioning before, willingness to pay or pricing, it's almost like a pie, and you want to pull from different pieces of the pie. One of those things is costs. One of those things is ascription of value of your customers, competitors, growth opportunities, et cetera. So it's sort of a pretty dynamic approach, hopefully. But let me know if that helps or if there's a follow-up question there. Cool. Anything you would add to that, Zaina?
No, I think that's good. I guess just emphasizing that idea of willingness to pay can just offset those costs. And like Evan said, if you're charging, US based prices in Northern Europe, then you would be losing out by those additional taxes. So even more of a reason to localize.
Awesome. Okay, I'm going to rattle off a couple others here because we got a good amount in the chat. Do you advertise the payment methods? This is from Ignace again. Do you advertise payment methods in social media, content, or other means, and then kind of expect growth from those regions due to the customers saying that they can conventionally pay, or is that kind of pointless because they're already expected to pay local methods to be available? Basically, would you include payment localization into your content marketing strategy? Okay, that's a loaded one. Do you have thoughts there, Zaina? I want to sit on that for a minute.
Yeah, I'm thinking. I mean, my hunch would be that you don't need to put it in your social media strategy. Definitely make it available in your website, so that they know once they get to your website that they can pay that way. And some like we saw in some of the examples, AWS or Spotify, they did advertise that they were adjusting to accept new payment methods. So whether that's, posting online or just sharing with their customers that they're expanding, I think that could be helpful. But if you need to put it, on Instagram, really think so. But yeah, Evan, what are your thoughts?
I think if it's a B2C product, I don't know enough about this context, Ignace, but if it's a B2C product, like maybe that's a competitive advantage. But I agree with you, Zaina. Like generally we see the conversions and the value happening like more at the pricing page as opposed to that being like a value prop for the product and social media. But really, really good question. Okay, we answered Liam's tax question. There's one from Leonard. Is localization discovery all done through survey research and estimates due to GDPR regulations? Interesting. Trying to programmatically figure out pricing can be challenging without being able to track geolocation. Are there other strategies, ways this is less manual? Zaina, you've done some of this research internationally. What are some ways that you've navigated the GDPR regulations or laws?
Yeah, we haven't had, so we have done the majority of it through survey research. And that usually includes either, this can be like anonymizing if you're worried about PII for your current customers, but also like outsourcing to local panels so that those responses are anonymized. So it's not like you're getting their information along with them, but they're anonymized responses. So outsourcing that to like a third party market panel that has people that could answer those, I think that should solve for it. That's what we've done. And we've surveyed all across the world without any issues with GDPR.
Agreed. So it would be running these quantitative analyses or surveys on anonymous customers or market panelists that aren't current customers, thus circumventing the GDPR laws. And that's probably one facet of creating a localization strategy. Other facets would be make sure that you're cognizant of what competitors are doing. You're using like paddle data, for example, that they publish online to understand like variances and payment types in regions. Like there's probably a good amount there, but really good question. And we covered, I think, yeah, we covered the other ones. Any other questions here from folks on the webinar? Okay, I think that'll do it then. Thanks for doing this, Zaina. That was great. Really interesting to hear your perspective, and obviously we talked about this a good amount, but helpful to go into the weeds on some of those topics, and hopefully helpful for those of you that hung out with us. If there's any questions or follow-up thoughts here, feel free to ping either one of us. I believe we'll send this webinar out with our emails included. Happy to jump on a call and chat through strategy or how we can help formally or informally. But thanks for doing this, guys. Enjoy the rest of your day.
Thank you. Bye.
See ya.